Technical analysis. There's people out there that swear by it. Others swear that it's completely useless. Is it astrology for men, or is it something that you can build an entire trading system around? I do think technical analysis is definitely useful, but when paired with a macro thesis and backdrop, it can be incredibly powerful. And in my mind, trading is all about psychology at a basic human level. So not knowing any technical analysis definitely puts you behind the herd. You should know what the basic chart patterns are because other people are using them and are setting their trades around them. So for this video, we're going to get into my top 5. So without any more fluff, let's dive right into the first one. And it's probably the easiest one, the most simple one: double tops and double bottoms. And we'll do this by example. I'll show you on the charts. So first up, I've chosen a double bottom to show as an example. You'll usually find these lurking at cycle pivots. A double top screams distribution in progress. Price tests the same resistance twice, fails both times, and collapses. That's your cue to stop buying. Double bottoms are the inverse, and it's what you can clearly see on this chart here. This is the 4-hour of Bitcoin. It's a sign of accumulation. Price retests support, holds, and breaks the neckline. You can get a confirmation candle and you enter on the retest, not at the resistance. So to actually illustrate this point a little bit more clearly, I'll draw the trend line of where the actual double bottom is. The sort of top or neckline, you can kind of take a look at it like this. A little bit more of an advanced concept, but it's very clear on this chart that when price came back under and retested, all it did was fill this fair value gap here. So technically it was here, and it filled the fair value gap almost perfectly and continued on higher. The real alpha for this type of chart pattern is that the volume should be decreasing on the second top or bottom. If volume increases, then it could be a breakout, not a pattern. So don't get trapped. On this, you can see pretty much perfectly on the first bottom, volume was really high. And on the second bottom, volume decreased and off we went. Now for the second chart pattern, this one is a little bit more difficult to spot, and it'll take some time for you to kind of get used to seeing this. But the head and shoulders pattern is a reliable trend reversal pattern. It's basically a representation of buyer exhaustion. The left shoulder forms, the head spikes higher, and the right shoulder confirms the fade. Take a look, pause the video, see if you can spot the head and shoulders on this chart, and then I'll actually draw it out. There's also the inverse head and shoulders, which is basically this, but flipped upside down for a bottom reversal. On TradingView, there's a very handy head and shoulders pattern that you can use to kind of help you draw these. And what I'll do is I'll actually draw this here. So you can see the left shoulder, the head. So the price spikes above the last top. And then you have the right shoulder where price breaks down below the neckline and collapses. Interestingly enough, price does end up retesting this area. Again, for an advanced view, this is sort of your fair value gap here, and it does retest and then sort of continues lower. This is a really important pattern. Again, it's a little bit more difficult to spot, especially live as it plays out, but the deeper the larger the head here, the higher probability of a trend reversal. The higher the head actually goes, and then the right shoulder, if it doesn't break that previous level, the higher the probability that it's actually a pending reversal and that you will be breaking down sort of into the lows. Again, if you're into sort of the smart money concepts, you can see there was a fair value gap here, and that eventually did fill and price continued on. So that's head and shoulders. And next we will move into wedge patterns. Wedges are basically the coiled springs of price action. You've got two types. You've got a falling wedge and you've got a rising wedge, the former being bullish, the latter being bearish. They trap retail traders with fake breakouts only to basically explode the other way. They're kind of sneaky. You'll see price grind inside a narrowing range. Volume will decline traders fall asleep, and then boom, expansion. I'll give you a minute to take a look, pause the video, see if you can find a wedge here, and then we'll draw it out. So a quick tip here, that wedges work best when they form against the trend, meaning a falling wedge in an uptrend is chef's kiss, right? A rising wedge in a downtrend, that's a short entry gift. Another tip here is volume. So if volume is falling as you go, that'll give more sort of power for the breakout, whether it's to the upside or to the downside. And you'll see sort of how I draw this falling wedge. We'll take the bottom of this candle and basically go to the bottom of this, but we'll come out a little bit so you can kind of see how this looks. Now, they don't have to be necessarily perfect, but you get the idea. They should be signaling sort of a breakout of this wedge to the upside, and it actually does eventually retest, consolidates even further, and then proceeds to explode higher. Another thing to note here is the volume does decline throughout this wedge and basically actually continues to decline even after the wedge is broken to the upside until you get that actual coiled breakout where volume spikes back up, price accelerates, and now you're in a new formation. So definitely keep an eye out for these. There's a lot of ways to interpret this. So the best thing to do is just practice. That's all you can really do. None of these are ever going to be perfect. And there's a huge ongoing debate as to whether you should use the wicks for some of these day patterns, whether you should only use the candle bodies. It also depends on what time frame you're looking on, right? Things will be different in different time frames. So as you go on and start spotting these, you'll gain more and more experience, and it will become more natural to see them without having to spend a ton of time studying the price action. Next up, we got symmetrical triangles. This one's simple, but it's kind of hard to spot on the chart, so you have to be wary for it. It's all about equilibrium. The price is coiling, it's consolidating, it's prepping for violence, volume's dying, and both buyers and sellers are saying, I'll wait for confirmation, and then it breaks and you get a high volatility expansion. This is better on the 2-hour chart, but I didn't want to remove everything. So see if you can find it, pause the video, and then we'll draw it out. All right, let's do it. So here's the catch with these. On a 2-hour chart, this is one bar from here to here. So I'm just going to use this as a bottom, and we'll use this as the top. And there you go. You pretty much have your symmetrical triangle. This pattern doesn't predict direction. It's all about the breakout and the volume. And you can see we had an insanely large wick here, but it did close within the triangle. And as you can tell by the volume on the bottom, you did get this spike, but it just slowly came off, minus this one awkward candle that got rejected back into the symmetrical triangle and actually ended up breaking lower with increased volume as it did so, and price went downwards. So these will take time to spot, especially as they're happening live, but you can spend some time yourself. I would say these are more typical on sort of the lower time frame charts, stuff like 10 minutes, 30 minutes, an hour, 2 hours. You get the picture. That's pretty much it for symmetrical triangles. And we'll move on to the last indicator. Last, but certainly not least, we're going to be talking about the cup and handle pattern. This one's rare in crypto because we're usually too impatient, but if it does form, it can be a golden signal. The cup is your U-shaped consolidation, not a V, a smooth sort of rounded bottom. Then comes a handle, a pullback that fakes out the weak hands, and then it's launch time when you break above the handle. This is a continuation pattern. It's not a reversal. So it forms after a major uptrend, and it's telling you that this is not done yet. And I've pulled up a great example here. Take a moment to see if you can spot it. You can pause the video. Okay, so again, this is not a reversal. This is a continuation. And you can see we just came off a pretty significant uptrend move. And now I will kind of show you the cup and handle pattern here, at least that I'm looking at it. There's not a specific trading view drawing for this, but we can use this one. So we have the cup in my mind. And again, this is up to you to see how you want to actually draw it, but there is the cup. We had a higher low here, and this would be the handle, and we broke out and we continued on further up. So that's the important thing to note here. If I can kind of maybe help you visualize it, it's sort of like that. I'm not an artist, so take this for what you will, but that's a general idea of how the cup and handle forms. The most important thing to note about these is that the best setups come when the handle forms on lower volume, which you can see was the case here. Volume completely decreased and then broke out on higher volume. That's your signal that basically this dip was being absorbed and not continued to sell off, and the uptrend from how we got to the cup itself continued on further. Those are my 5 top chart patterns. Pretty simple, but hard to spot in the moment. So for me, the way that I learned to actually find these and see them as they're forming is just through time and experience. If you have the time to watch the charts or to take a look at them, at least on a daily basis, you'll see these play out all the time. You can look at different time frames and you will see at least 2 or 3 of these a week, if not more. And there are hundreds of chart patterns out there, but for me, these have been the most valuable. So as always, I hope you enjoyed this video. Thanks for sticking around. If you made it this long, I really appreciate it. And I'll see you for the next one. Thanks for watching.